Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. India regained its status as the world's fastest growing major economy in the October-December quarter, surpassing China's growth after a gap of 1 year, boosted by higher government spending and a pickup in manufacturing and services. The gross domestic product growth rate for the third quarter of the current fiscal stood at 7.2%. The latest data signals that the economy is in the reporting quarter grew at its fastest pace in 5 quarters. The GDP growth rate during the period managed to beat street expectations. A Reuters survey of 35 economists predicted the data to come at 6.9%. The government revised its 2017-18 GDP growth forecast to 6.6% from 6.5% earlier. On this edition of Policy Watch, we will analyze India's growth story. Joining me on the program today are Dr. Arvind Virmani, former Chief Economic Advisor to the Government of India, and A.K. Bhattcharya, Editorial Director of the Bussiness Standard. Thank you to both my guests for joining me on this edition of Policy Watch. Dr. Virmani, I'd like to begin with you. What do you make of the latest CSO data?
So, 3 or 4 points. One, when the quarter 1 5.7 data came in, we had said that this is likely to be the bottom. 2, that the next quarter Q2 would see a recovery, though one was obviously not sure at that point how much it would be, but one was quite sure that the second half would see a very sharp recovery. So, I would say and therefore, I actually stuck to my full year forecast of 6.75 even when the CSO reduced their numbers to 6.5. So, as you just mentioned, they have now revised it back up, and I am hopeful that we will still get close to my forecast of 6.75, maybe not exactly. So, that is one point. The second point is, again, in the last data, a lot of people had focused on the ratio of investment to GDP. The point I had made, in fact, maybe on your show only, was that it's the rate of growth of fixed investment is accelerating, and that will mean that there could be a reasonably good recovery of investment over time. That has been confirmed now. There is a pretty sharp recovery in the investment segment of the economy, which, as you know, drives future growth, etc. And the third point where I was slightly...
But is that still going to be the case in Q4 after what we've seen, after what we've seen with the PNB and, Nirav Modi, Rotomac and so on?
Good question. The investment numbers are always somewhat uncertain. So, the recovery is actually sharper than the trend. So, what I then do is I put that into a trend thing, and I think the trend will continue. Clearly, the growth rate is not going to be the same because it's very high in this particular data. So, Q4 rate may not be that high, but it will continue on the trend despite the problems, which is your question. That is my judgment at this point, right? Now, of course, there will be some effect, nobody says there will be zero effect of the PNB problems. And the related, within the second point, the consumption recovery, I admit that it's been slightly slower than I expected, and I go back and analyze it. It's probably because there was a lot of uncertainty, and whenever people have, especially the average person, feels a lot of uncertainty, they tend to save a little more than they might normally. But I'm hopeful that by next quarter there will be some revival in the growth rate. The growth is there, but it's been declining.
Sure.
So that is my second point. And the third point is on the supply side, that virtually all the sectors, like agriculture, construction, the most encouraging is construction, which had really been declining, was on a clear declining trend. It's finally, I think, reviving, and that is important not just for employment, but also for what we call structural investment in structures.
Sure.
In household, because much of the household investment is in structures like housing, etc. And this construction thing suggests to me that that also may be reviving. We had talked again, I think we've talked about this lot of laws on black money, etc. have dampened construction and housing, etc. So, this may be the first signs of revival.
Of a revival and a recovery there in that sector. Okay. Talking about sectors, Mr. Bhattacharya, Dr. Virmani is saying that, construction is definitely a positive trend, a positive sign that we are seeing. What are the other sectors that have led to this 7.2% growth in Q3.
Well, there is no doubt that this is a broad-based recovery. It is not just a question of a few sectors. If you look at the trade and services, which includes construction, that has done very well. Even agriculture, which has grown by 4%, which is a smart recovery. You take manufacturing, which has grown by 8%, up from 6% in the previous quarter. Even the government expenditure has actually has helped keep the growth rate buoyant. So I would say it's a broad-based recovery, and if you look back in the last few quarters, it's a steady rate of growth from 5.7% in the first quarter to higher up, and now to 7.2%. Now to 7.2% in the thing. Yeah. And now, but then it's an important point to note is that we have still some way to go, because that if you look at the second quarter growth of 2016-17, which is the pre-demonetization level, the growth rate was 7.6%. So therefore, in my view, the true potential of the economy is still somewhere near closer to 7.6 or 8%. So we are at 7.2% in the third quarter. My sense is we are recovering steadily. It's a broad-based recovery, but I think still some way to go in catching up with whatever we lost as a result of those two decisions of demonetization and GST.
Sure. You know, Mr. Bhattcharya is talking about a broad-based recovery, Dr. Virmani. Are there any concern areas for us going forward that need to be addressed?
So, you know, we always look at the demand side and the supply side. I think the concern area is on the demand side, which is one sector I didn't mention, is the export side. And that recovery is another, that's not recovering actually. It was on a good recovery path, but again there seems to be stalling, and I would lay that to the second element which my friend here has mentioned, which is that the GST, you know, the way the GST export, what do you call it, not remittance, export, you know, the input thing has to be given back, taxes have to be recovered back to the exporter. That system was very badly set up, unfortunately. Of course, the government realized it and they've changed it, and that will become applicable in April 1st. And I hope they are able to implement it as effectively as is necessary. Otherwise, but that still remains something to be seen, you know, because in the accumulated, the word is not coming, when you repay the input
tax credit.
Yeah, input tax credit. Yeah. Input tax credit is a serious problem, but this scheme, again, we have discussed this scheme here on your program, which is in design seems very good, but if implementation is not up to that standard, we could still see a slower recovery, and it's very important that export growth recover.
Sure, export growth needs to recover is what you're saying. Yes,
I will add two more areas of concern going forward. One is inflation, because you are probably the monsoon may not, if it doesn't hold up, and
there are reports that suggest that we could
right now there are possibly it might be better, but clearly, and with the MSP prices being raised, my sense is inflation will be an area of concern. And number two would be interest rates, because with growth picking up and inflation possibly rearing its ugly head once again.
Deposits rates have been increased by SBI, so we might see some banks also following suit.
Which to my mind will not be good news for the growth prospects.
Sure. You're talking about growth now. You spoke about 7.6% you know, growth rate, and possibly even closer to 8% is what we should be. Moody's has kept its estimates for 2018 unchanged at 7.6. Are we going to, could we safely say that we can achieve this growth rate of 7.6, or is it going to surpass that, Mr. Bhattcharya?
Well, I personally feel is that we need to tackle a few more challenges with proper policy responses. And I think one of them is how to tackle the NPA situation, how we can expedite the NPA resolution without letting it drag in the courts. And the dangers are that many of these cases where the stressed assets are being resolved, the resolution committees are giving their verdict, but a lot of people are preferring to go move courts. And if they drag on, my sense is that the banks will not be free of their stressed assets, the leverage companies will not be free of their debt, and so it might act as a drag. So we need to put in place a system by which the insolvency and bankruptcy code implementation is smoother and faster. And finally, the labor reforms, which have begun in a good way, in my view, with the introduction of the fixed term employment scheme, which should be monitored closely, and it should be used in a manner that the employers get encouraged to hire more people and meet their genuine requirements for creating jobs, and that helps in growth.
Dr. Virmani, you keep working out numbers, you keep coming out with your own research. Your estimates for Q4?
So, very briefly, one, I think very important that he has mentioned the labor reform, because I thought that was the under discussed thing of the budget. But going on to the forecast, I would say I differ slightly from my friend here. I would put the forecast, my forecast at 7.5 plus minus 0.5. And why that plus minus 0.5?
This is for Q4 or this is for?
No, this is the next year now.
Next year, okay.
I'm
next
now
fiscal.
almost
Okay.
ready.
Yes.
I'll put it on paper in March, but I can give you a preview. What I am slightly less worried about the first two factors he mentioned, because I focus on the real interest rate, which is the interest rate minus the inflation. Oddly enough, the rise in inflation has actually reduced the effective real interest rate. So I feel the drag on investment and consumer durable consumption will not be as significant as he fears. However, I would put a little more emphasis where I think the negative could come from is exactly your second question, which is the NPAs and this whole PNB thing and how it plays into each other, etc., where I agree fully with Ashok on this. So that is my, if that doesn't work out, you could go below 7.5. It works out well, you could go above 7.5.
So 7.5 is your estimate at this point in time.
Yeah.
Okay, all right. With that now, we'll slip into a short break. On the other side, we will talk about the NPA issue. Stay tuned. We'll be right back. Welcome back. You're watching Policy Watch with me, Frank Pereira. The Finance Ministry on Tuesday directed public sector banks to probe all non-performing assets or bad loan accounts of over 50 crore rupees for possible fraud and accordingly report the cases to the Central Bureau of Investigation. The direction follows state-owned lender PNB reporting a 12,700 crore rupees fraud through alleged misuse of letters of undertaking by billionaire jeweler Nirav Modi and associates. Besides, other PSBs too have approached investigating agencies as borrowers have not returned loans. Last week, the Finance Minister Arun Jaitley criticized regulators as well as bank managements and auditors for their failure to detect bank fraud, saying politicians are accountable but regulators are not. In the next segment of Policy Watch today, we will discuss the NPA problem and the role of audit regulators. Still with me on the program now are Dr. Arvind Virmani, former Chief Economic Advisor to the Government of India, and A.K. Bhattcharya, Editorial Director of the Bussiness Standard. Mr. Bhattcharya, I'd like to begin with you, of course. Let's first try and understand the role of an audit regulator and how does the audit regulator fit into the scheme of things as far as the PNB case and the NPA problem is concerned?
Well, there are two bodies that we are talking about right now. One is an auditor, the other is an audit regulator. Now, an auditor is one who is attached to the company. Under the new rules, an auditor gets rotated every 3 years. Those rules of appointment of auditors have been strengthened. The gaps have been plugged. And when an auditor certifies a book of accounts as to be kosher, then the management can actually heave a sigh of relief and go to their shareholders and say that things are all right and I'm okay. Now, when an auditor sort of raises an alarm or says that there are certain things that they don't seem to follow the rules, they violate the good accounting practices, then immediately the management is called to explain the shareholders at the annual general meetings. So the auditors actually act as some sort of a watchdog on the performance of any company, whether it be a bank or any manufacturing company. Now, when an auditor fails to identify or notice that something has gone amiss, then a larger problem arises, and that larger problem comes from the question of how the auditors, the auditory bodies, are being regulated. Now, it's a important thing to remember that the audit profession in this country has a regulator, but it is a different kind of regulator. It is more in the nature of a self-regulatory organization, wherein the auditors themselves are formed into a body, and that body oversees how the auditors are functioning and operating, whether they are following the due diligence norms or not.
Sure.
It is not for the first time that the auditor's failure in detecting something that has gone wrong or a fraud has come up in many other past. Recent case was Satyam case, where the auditors failed to notice that, and a lot of the gaps in the auditory rules were plugged at that time.
Sure.
But right now the focus is on what role did the regulator play in making sure that the auditors to these banks actually ensured that the book of accounts were brought to light, and certain gaps or certain problems were not highlighted.
Sure.
The government, we understand, is of the view that the SRO experiment with the auditors regulatory body probably is an idea whose time is up, and probably we may see some change in the law, and a newly empowered regulator can come in instead of a self-regulatory organization.
Indeed.
The auditing profession feels differently. They feel that they can regulate themselves. So it's an old debate. My sense is that time has come where the SRO experiment with auditors has actually needs to be changed.
So past its time, basically.
Past its time, and you need to have a statutory provision by which a statutorily empowered regulator is in place, which can oversee whether auditors are performing their required jobs.
All right, let me bring in Dr. Virmani now. You know, Dr. Virmani, do you believe that you need tighter norms for auditors, and also, as Mr. Bhattcharya just pointed out, further accountability needs to fixed as far as regulators are concerned?
So, you know, when I interacted with this self-regulatory body, there were some very smart people and knowledgeable people, but I think the deficiency is that they can only talk on a general level, lay down rules. They don't really have the authority or the power to go and look at things. They don't have the time. They are themselves, you know, known professionals in their field, and frankly, they are some of them are very smart. You know, from my limited knowledge of accounting. But so the issue has always been that if you have an outsider, will they have the knowledge, but they will have the power. That's the essence of the government appointing. When the government appoint, it will make sure, you know, and the reason why account people don't want it is because they are afraid that these people will become control minded rather than regulation minded. That's a different kind of mindset. You know, regulation means you encourage the best practice, and because it's in the interest of both the regulator and the thing. So the issue is if they focus it on catching, and second part is if you compare, let's say, with doctors or something, there is a practice of you know, certifying that these guys are still you know, have the are up on their knowledge, etc. Most countries have that. So in that sense, you know, it's a difficult choice, but I think now it's inevitable. Most likely there will be a government regulator.
Sure.
Will happen.
You know, the present crisis facing the public sector banks, is it a result of bad regulation, Mr. Bhattcharya, or is it a result of a combination of things?
It is a combination of things. There are many factors at play here. The number one is when you have a management which doesn't enforce good governance practices or good administrative practices, ensuring that the right things are done in the right way. I think it's a management failure at one level. The second failure is definitely a regulatory failure. Reserve Bank of India has to explain why it did not take necessary action on the basis of the inspection reports it had in its possession, and if indeed it was aware of certain wrongdoings, violation of the letter of undertaking norms were brought to its notice, and the regulator had informed the bank that it must correct itself and why those corrections were not carried out. So it is a regulatory failure. And finally, in my view, the government itself cannot disclaim its own responsibility, because government is a shareholder, and through the Department of Financial Services, it has a fiduciary responsibility as a shareholder of these banks, wherein the Department of Financial Services must make sure that the banks in which the government has majority shareholding follow the basic good governance practices.
Indeed.
So I think it's a failure at various level, but in the case, the question that you are raising, we are looking at only the auditory regulation, wherein I also feel that the audit regulation also needs to be strengthened, so that we plug all the possible gaps.
Indeed, indeed. This problem that we are talking about, Dr. Virmani, is it just limited to public sector banks, or is it a problem that all the banks face?
See, the problem which arise in public sector banks and private sector banks are different, because the incentive structures are different, the way they are organized and run. In government, the problem is of internal running of the whole structure, from the directors, management, etc., because government appoints all of them. The government has certain political objectives, they are not financial objectives. In the private sector, profits are important, and there is an owner who worries about the profit, so the same problems are not there. These particular problems seems more endemic, the ones we are discussing arise in my view more on the public sector side. The problems which arise on private sector are generally different. They are of the kind like mis-selling. There's too much pressure on all employees to generate more business, and they follow something unethical practice in selling and getting more customers. On the other hand, the problem in government side is that it's nobody's money, so it's not there's nobody saying, oh, if there's a little bit of fraud, my profits will go down. Nobody has their own skin in the game, as they say. So for these particular frauds, I am fairly clear that it's the public sector which is much more amenable or much more likely to suffer from these, and therefore we have to think of how to genuinely and reform public sector in the long term. Now, people make this as an issue of having complete privatization or not. My suggestion has always been, let's start. Let us sell the one or two small banks which have repeatedly badly performed. Let's try and see what happens. Selling 26% in a small bank is not going to be a big disaster. On the other hand, it will generate a lot of information and knowledge about how things are likely to be if we privatize more of them.
So complete privatization of banks is not a solution.
70%, because you got 70% of the thing. Let's at least start something.
Sure. Okay.
And see how it works out.
And then we can take a call.
Then we can next year say, okay, this has gone well, let's do another two.
Fair enough. Talking about the private sector banks, Mr. Bhattcharya, Dr. Virmani spoke about how they have their own set of problems, and they are slightly different from what the public sector banks are facing today. But do the private sector banks also need to be probed?
I think the regulator is there. The Reserve Bank of India is a regulator not only for public sector banks, but also for private sector banks. And I think inspection should take place with the same rigor as it should take place for the public sector. I don't think the ownership character of a bank can be a criterion for whether regulation should be soft or light or tough. After all, these are banks. They are repositories of public money, public deposits. So therefore, they must be held to the highest standards of probity and governance. And in my view, certainly there is at this point in time the approach to ownership change should probably be a graded exercise. The first thing government should look at is, instead of having 24 to 25 public sector banks, maybe bring them down to 4 or 5 large public sector banks, and then make them large. And then
this has been talked about for a long time now.
And then maybe gradually take one of them and bring down their government equity to less than maybe 33%. As a matter of fact, in the last NDA government, the finance minister had actually proposed in his budget to bring down government equity to 33% in banks, public sector banks, without changing its public sector character actually.
Sure.
So it was a it was a very interesting move, and maybe time has come to look at these options and, as Dr. Virmani rightly says, do it in a properly graded way.
In a phased manner.
In a phased manner.
Right. All right. Quick closing comment from you, Dr. Virmani. After all that we've seen over the last 1 month with the public sector banks, do you believe there are tougher days to come as far as banking in this country is concerned?
I'm not sure what you mean by tougher days. If you recall, we did say that this is a new risk factor. You know, how foreign investors view it, how it affects the lending, which seemed to be recovering. The last data we had was credit growth had resumed, etc. Certainly there is a risk element which is very unfortunate, given that every time we seem to be on the recovery path, something unpleasant seems to happen. But I'm hopeful. I mean, maybe I'm an eternal optimist, but given that, I would say I'm optimistic that we will get through this. Without too much.
This too shall pass.
Yeah.
Okay, all right. On that note, then we'll call it a wrap on this edition of Policy Watch. You can send us your feedback as always at policywatch.feedback@gmail.com, and also you can tweet to us on our Twitter handles FRP09 and Rajya Sabha TV. That's it from me. I'd like to thank both my guests for joining me on the program. See you again next time.